Trump's new tax law 2025, the 10 huge changes that you need to know. Hi everybody, my name is Nicole. I am one of the senior tax advisors at Robert Hall and Associates, and we are going to break down the big beautiful bill and how it affects your taxes, because it really is affecting everybody's taxes. So let's get into the 10 big changes that you're going to see affect you when you're doing your tax returns. Before we get into it, please don't forget to hit the like and subscribe button so you don't miss out on any of our upcoming videos. Okay, let's talk about the first change that we have, and it's kind of an anti-change. It's a no change, and it's probably the most boring change that exists. The big beautiful bill is going to extend the 2017 TCJA Act till 2028. And so what happened in 2017? Trump did a big renovation on the tax code and a bunch of tax laws. One of the big things was the standard deduction was increased. It went from like $6,000 to like $12,000 for people single. And that law, the TCJA Act in 2017, is set to expire. So regardless of any president that was going to come in, there were going to be changes because the president needs to decide, are we going to revert back and have people have really large decreases in the standard deduction that they were used to? Or are we going to continue, or are we going to change things entirely? And Trump decided to extend and continue what has been happening with the TCJA Act since 2017. The second thing that we've got is the child tax credit has increased from $2,000 per child to $2,200 per child. So each child will get an extra $200. This is not the dependent care credit. This is simply the child tax credit, and it has no effect on the refundable and non-refundable portions as well. The third big change is the SALT tax cap, SALT tax deduction cap. So SALT taxes are state and local taxes. Yes, we say the T redundantly, state and local taxes. And there is a cap of $10,000 for SALT taxes. And so SALT taxes include the taxes that you pay to the state, whether it's income tax, property tax, or sales tax, for example. And you will get a $10,000 deduction if you itemize on your federal return for those taxes. It's very common for you to get a deduction for taxes you pay. Like if I made money in France and I had to pay the French government, I would get a deduction for the taxes I paid to France, because you don't want to be double taxed. Like, that's not fair. And so you should get credit for the taxes you pay. And so if you're paying the state, the federal government gives you a deduction. But with the TCJA Act, it got capped at $10,000, which might be fine. $10,000 does sound like a lot of money. However, if you live in one of those states that have high property taxes and you own property, then you easily hit that $10,000 cap and then some. Most people, like in California, that own property greatly exceed that $10,000 cap because their property taxes can be $10,000 on their own, and that's cheap property taxes. And then they also have the income taxes that they paid to the state, and then they also may have some sales tax, like if they bought a car or something. And so they exceed the $10,000 very, 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 very easily. So that cap has been increased or raised to $40,000. And so this is a really good thing for people that live in a state where their property taxes are quite high, because now they get to count more of they get more of a deduction for taxes that they're already paying. $30,000 is quite a bit of money. Okay, let's talk about one of the other changes, the fourth change. No federal income tax on some of your tips and overtime. Let me explain. You are able to deduct up to $25,000 of tips tax-free. So $25,000 of tipped income will be tax-free. If you make $26,000 in tips and $40,000 in wages, then that $1,000 will be added to your $40,000 in wages. So you'll get taxed on $41,000. If you make $25,000, then only the $40,000 of wages will be taxed. And that $25,000 that you made in tips will be federally tax-free. And for overtime, $12,500 will be able to be tax-free of overtime. So the first $12,500 for single filers or for every single person, so it's going to be $25,000 if you're married filing joint, will be tax-free of your overtime federally. You're still going to pay payroll taxes, you're still going to pay state income tax, but you will not have federal income tax on this tipped or overtime income. The fifth change is going to be the Social Security change. That is where single filers will have a $6,000 deduction and married filing joint filers will have a $12,000 deduction. And so if you are close to the caps of the Social Security, remember Social Security is taxed either at 0%, 50%, or 85%. If you're single, your cap is $24,000, If you're married filing joint and your cap is going to be $34,000, and then 50% of your Social Security will be taxed. If you add another $10,000 to that, you'll get up to the 85% of your Social Security will be taxed. Because you now have the $6,000 or $12,000 deduction, that's going to make it so a lot of people that are already in the 85% will drop down to the 50%, and people that are in the 50%, a lot of them will drop down to the 0%. And so it will greatly reduce the amount that is taxed. Because remember, 35% of your Social Security is never going to be taxed. And so that has increased it because you get an extra $6,000 or $12,000. The sixth thing that is happening because of Trump's big, beautiful bill is a deduction on auto loan interest. And so if people are paying interest on their vehicles, if you financed a vehicle and you pay $6,000 in interest a year, that is now going to be a deduction. It's going to count as part of your itemized deduction. So normally we only count if you own a home, the interest you pay on your mortgage interest. And now you get to count your auto interest as well as your mortgage interest as an itemized deduction. And you can take up to $10,000 of interest deductions as well. The seventh one is the annual gift tax exemption. It has doubled to $15 million for an individual, or $30 million. It's $15 million per person, or $30 million per couple, and so that has been raised. The eighth change that's coming from Trump's big, beautiful bill is a charitable deduction for people that don't itemize. You get an extra $1,000 per person, or $2,000 if you're filing joint. And this is if you're taking the standard deduction. You can, basically your standard deduction is going to increase if you make charitable contributions. You saw this similarly during COVID. We were able to add an extra $300 of charitable contributions, or $600 if you're married filing joint, to your standard deduction without having to itemize. Normally, if you're taking charitable deductions, you have to itemize. The ninth thing is a new thing that a lot of moderates have really pushed for, and that's called the Trump accounts. Essentially, this is a custodial retirement account that's going to be created for children. The children need to be born in 2025 to 2028, because the big beautiful bill, most of the stuff expires in 2028. And this is going to be $1,000 given to each child born between those years, and that will be tax-free, and it'll have limits of when they can pull it out. And essentially, you're just giving the government is giving these kids a little bit of a retirement account, as people are very, very concerned about, will Social Security be around? The final thing is the clean energy rollback, the credits rollback. The credits have now been set to expire in 2025, September of 2025. The credits were going to expire in 2033, but the EV credits are September 2025, and the solar credits are going to slowly start to phase out in 2026. So a lot of people were getting 7,000, 7,500 or anything like that from the EV credits, and then you would get 33%, it caps, but you get 33% for like wind and solar, and so a lot of people bought solar and stuff. And those credits are going away. The vehicle ones you're going to see completely gone September 2025. So you'll see that a lot when people are selling cars. All those car dealers are already talking about it. And then the solar ones, it's going to start to phase out in 2026. Okay, so now that we covered the 10 big changes from President Trump's big, beautiful bill, the changes were going to happen regardless. President Trump has been notorious and known for doing a lot of changes. And if you want to see how they affect you personally, because they really are affecting almost everybody that pays taxes, please go to our website, roberthalltaxes.com, sign up for a free consultation. We'll be happy for you to come sit down with a tax expert. We'll review what's going on and we'll tell you how it's affecting you for free. We love to meet new people. My name is Nicole. It's been so wonderful talking with you guys. I hope you understand about the big, beautiful bill. Please hit the like and subscribe, and I will see you guys on the next one. Bye.